celebrating 15 years of Young Turks.
Launched by Rajiv Lall, Vishal, Mehta and Peck in 2005, social impact venture fund Lok Capital completed a decade of investing in India this year. Lok Capital's first fund of $22 million has been fully returned to investors at an annual return rate of 10%, and IPOs of its portfolio companies, which include Equitas Holdings and Ujjivan Financial Services, have done well. With its second fund of $65 million, Lok Capital expanded its portfolio of investments to areas like agriculture, dairy, livelihood and healthcare. Now looking to close their third fund at $100 million, we caught up with the founding team to reflect on the journey so far and understand what lies ahead for this impact investment fund. Hello and welcome to this Young Turks special. I'm Shereen, Bhan. Financial inclusion may be the buzzword today, but my guests on the show bet on the idea of financial inclusion well before it was sexy. Joining us today, Rajiv Lall and Vishal Mehta of Lok Capital. Gentlemen, congratulations on completing 10 years and betting on a sector that, as I pointed out today, everybody's talking about. But Rajiv, let me start by asking you, 10 years ago when you decided to make these bets, and some of these companies, your portfolio companies like Equitas, Ujjivan, have had successful IPOs very recently. What gave you the confidence to bet on this sector?
It wasn't really a well thought through commercial decision. It was really done with a different purpose in mind. The purpose was much more modest. The purpose was to act as a catalyst for and support, nurture business models that, while being financially self-sustaining, also deliver the big impact of financial inclusion. I think the success of this approach and these platforms has been beyond anything certainly I could have imagined when we started doing this. Just to set the tone for this conversation, yes. I would add a cautionary note. I don't want the success of this sector to become its enemy.
And we have seen that happen in the past as well, yes.
We have seen that happen in the past.
So, Vishal, Rajiv talked about the business model and some of the past excesses have been linked to the kind of growth that this sector, specifically the microfinance sector in India, has seen. But if you look at the business models today, what's changed in terms of both the approach, in terms of the focus being on profitability, sustainability? How do you see the business model and the thinking of the founder promoters changing today?
I think the majority of the change would have been in the last, I would say, 4 or 5 years. In some ways, Andhra crisis in 2010 was a turning point, right? And what came after that, which is the last 2-3 years, have been a very hugely supportive turning points in terms of the new regulations for banks. If you even go to the core of the crisis, the two things that were kind of haunting it. Number one was that your ability to do any product innovation was just not there. On top of it, the whole idea of investing in technology, investing in infrastructure just didn't exist that time. I think those are the two major things that have changed with small finance banks, with being able to become a correspondent for large-scale universal banks in terms of the infrastructure investment that has happened in UPI, Aadhaar, and to be able to do interbanking transfers and all that. That has opened up so many more options, and that is what the future, at least for the next 5 years, is.
Rajiv, just taking that point forward, the way that we've actually seen these listings take place of some of your portfolio companies, Equitas, Ujjivan, etc. Do you think that there is now a greater understanding of the opportunities, the potential, and has the market truly started to understand this sector and these businesses?
It's still early days, I think. I think the real revolution that needs to come, the next phase of it, is really to deliver the full suite of, if we're talking specifically about financial inclusion, then the full suite of banking services to the poor. 60% of the household savings in our country still remain outside the banking system. Right. The reason they remain outside the banking system is that the cost for the banks to serve the small saver have been prohibitively high. Now, because of technology, Aadhaar, changing regulations, it has now become possible to contemplate aggregating savings of the poor at much lower price points. So, you know, a 2,000 rupee, a 1,000 rupee savings account should be cash break even now for a small finance bank. That's the expectation. So, as you know, these small finance banks that have just recently got bank licenses try to develop their liabilities franchises, their depository franchises, my hope is that they will explore this avenue, and that will create a much more stable, a much more robust relationship with the base of the pyramid customer. If you are only a one-trick pony and you're just lending to them this single product, which is a microfinance product, there are limitations to it, there are vulnerabilities to it. But if you have a broader relationship, which is that of a borrower and a saver, you can expect to develop a life cycle relationship with a poor household. That creating a holistic relationship, I think, is the next frontier.
So, you know, you're talking about creating a holistic relationship and being able to offer the full suite of financial services. But Vishal, the key perhaps is going to be differentiation. Is there enough that we're seeing on that front?
I think differentiation is absolutely happening. We're getting NBFC proposals of saying that I do daily collection, working capital loan in these 3 areas in Delhi.
Okay.
And that is my model for the next 4 years. Right? So that level of niche, you know, whether we see that that's scalable and that's doable or not, but clearly you're seeing many of those things coming out. I think where it could immensely further propel that innovation in differentiation could be, we need to very badly figure out other ways of securitization, right?
The other, I think, conspicuous feature of the next 5 years will be a greater convergence between the last mile lenders and the banking system. The banks begin to provide basically a surrogate balance sheet to last mile distributors, or there is some consolidation, or there is securitization. A combination of these 3 things will mean that the complementarity between the last mile that fintech and NBFCs are providing with the banking system will be more systematically exploited than they have been in the past.
If you remember, this is how, when we were raising Lok 1 in 05,
I remember that,
we actually betted the whole fund on this model. Right? We were calling a service company model, which was essentially nothing but, you guys are good at maintaining client relationship, originating loans. Why do you have to have a balance sheet?
Why do you have to have a balance sheet? But we were unable to raise
it just didn't.
On that,
this is exactly
we were before our time. Somewhere along the way, business have lost sight of what their real purpose is. Unless business reimagines its contribution and role and obligation to society, there will be a continuing backlash.
Celebrating 15 years of Young Turks. Celebrating 15 years of Young Turks.
From Lok 1 to Lok 3, I mean, you know, the size of the funds has gone up as well, but what's been the experience from Lok 1 to Lok 3?
It's been an extraordinary journey. I mean, I'm now basically, you know, a mentor in chief. That's all. It's Vishal and Venki and team that are driving day-to-day operations. We've had a first closing of our 3rd fund, and all these funds have helped generate a modest, but hopefully a growing corpus for Lok Capital, Lok Foundation.
The mentor is talking about Lok Foundation. Vishal, you've got to actually do the bread and butter stuff. So give me a sense of, you know, how things have changed from Lok 1 to Lok 3.
I think it's dramatic change, and we had a first conference of LPGP meet of the Impact Investing Council in Gurgaon. It was the first of its kind, and we were not sure how many people would actually come. very good attendance. But that was just a demonstration of something that started with very loosely defining what impact is and having very little knowledge of what financial returns we can actually make, right?
So how would you define impact investing today?
Indian context, what we're looking at is for-profit companies that are serving 7 or 8 critical sectors which are largely related to basic services, where at least majority of your clients can be selected on the income basis. Basic services, specific sectors, income criteria, right? On these 3, if you're able to fulfill, and we're looking at for-profit companies only, then that's what we call a social enterprise in which an impact investor can participate.
We've been associated with the World Economic Forum and the Schwab Foundation for the last 15 years, putting together the India Social Entrepreneur Awards. And I always find it difficult when people box people into these categories of social entrepreneur and so on and so forth. But how have you seen the social entrepreneur change in the last 10 years?
I do believe, this is a personal belief, I'm sure a lot of people disagree with me, that somewhere along the way, business have lost sight of what their real purpose is. And I keep telling whoever is willing to listen that unless business reimagines its contribution and role and obligation to society, there will be a continuing backlash against all forms of for-profit.
But then when you look at this in the context of this constant pressure and debate on valuations, earnings, quarterly results and so on and so forth, there does seem to be friction between what the end objective of business ought to be and what how you measure them and their performance.
Absolutely. So this is, I'm saying, this is a real it's a meta question of our times, right? How does capitalism live comfortably or not live comfortably, deliver within the parameters and the needs of a compelling need for social justice? This is the backlash against globalization.
But what gives you conviction today? You're examining different business models. You're looking at a bunch of sectors from healthcare to education to microfinance. What gives you conviction today that this is scalable, it is replicable, it is something that gives us hope about the way business and the purpose of business in the future?
So even if you keep it simple, right, we say that there is the financial side to it and there's a impact social side to it, right? I mean, look at the samples are small, right? Lok funds have performed much better than most conventional
mainstream private equity,
right?
So
interestingly enough,
average return rate of?
So Lok 1 has just been fully liquidated. We made about 10% net dollar return, IRR.
Okay.
Right? Lok 2 has returned 75% of its capital back, so it's largely unrealized as well. We are sitting at about 22% dollar net IRR, right? For those vintages, if not, so this is good performance. This is very good performance, right? So that's the financial side. So that's some indication that yes,
it works.
On the impact side, I mean, there's no doubt. I mean, let's look at microfinance. And just for that, Rajiv's bank is interested in MFIs today, right? Because it makes, from business point of view, I mean, Rajiv in his own personal experience has done this and all that. But we have had several bankers who completely ruled this out, saying that why do we need intermediation? Right? We'll go and directly serve it, right? So from a business point of view, I think it's very well proven. From a return point of view, it is getting proven. The impact side, I think that's a,
in the Lok portfolio, how many millions of customers have we, people have we reached?
Yeah, we just launched a new impact.
This is your opportunity.
No, I know, but I don't want to overestimate also, because yes, they are customers, and have you really created impact there? What is the level of engagement? I think that's always a very, very difficult one to. It's a very expensive business to measure that as well. But we've had 25 companies. 80% of them have been in financial services. My sense is this is way beyond 15-20 million households. Funds like Siddhi Aspire Fund.
Yeah, terrific, absolutely.
That's a $1 billion commitment from the government, and we've been interacting with them and their openness. So
you think the fund of funds is working?
Oh, absolutely, yes.
Celebrating 15 years of Young Turks. celebrating 15 years of Young Turks.
Untold stories, and it's not very often that a lot of these stories are extensively reported on, but anything that's exciting that's caught your eye today that may be a star in the future, a bright spark in the future?
A
bunch of them, a long line.
There are a bunch of them, but I think there are 2 or 3 things that I'm very intrigued by. One is in the area of education, and the other one in healthcare. In education, it's just the starting with the Khan Academy kind of idea. This whole English language training on the web. This has huge promise, and the sense that people had that how do you bridge the pedagogic divide through distance education? I think that fear is being overcome every day, and that I think makes me hugely excited about that particular space. Secondly, in healthcare, we've invested in a eye care company. The big issue with healthcare is you have expertise in doctors who are in the cities, not able, willing to move out. How do you bridge that divide? Again, it's a combination of technology and bringing down the cost to serve per patient. Lots of opportunity there.
Okay.
These are just
2 big sectors.
2 examples. But within financial services, there's lots happening. You know what Vishal was saying about specialization, for example. So financing for self-improvement, for investment in human capital, training, quite apart from education, right? That I think is a huge opportunity which could benefit from all the trends that we're talking about. So 3 ideas.
Okay, 3 ideas. Let me end by asking the 2 of you, in terms of providing a much more facilitating environment, we've been talking about regulations and how the regulations have changed, specifically when we talk about MFIs, etc. But from a regulatory point of view, anything that can be done from a policy and a government perspective to sort of boost this whole?
Some stuff has already been done. I think the AIF regulations, I think very sensible. They have been a boost to a domestic fund management industry that will in turn give a boost to this kind of investing and venture investing in our country. I think Lok has benefited from that. Other than that, there are lots of little regulatory things in financial services that could still be improved. I mean, I think my biggest bugbear, now that I'm also wearing the banking hat, is the whole traditional approach to priority sector lending, right? I strongly believe that inclusion cannot be mandated, and we have 40 years of history to prove that. Inclusion has to be induced, and now that we have the technology to do it, it's time to revisit the old priority sector straitjacket as a way of delivering financial inclusion. That's my 2 cents.
That's Rajiv's idea.
It was. I'm not debating that.
But maybe the time is.
But now that IDFC Bank is
that's the pitch there for IDFC Bank. So I'll get you to pitch for Lok before we.
I think apart from the AIF, which is huge, people still haven't realized what the advantages of that could be. Just domestic capital. The other part also is the large, funds like SIDBI Aspire Fund.
Terrific, absolutely.
That's a $1 billion commitment from the government, and we've been interacting with them, and their openness for these things is,
NABARD as well,
right?
They have done
so you think the fund of funds is working?
Oh, absolutely, yes. I mean, we know 2-3 funds who've already been supported by them. We've been interacting with them. And we know that commitment is real. Right, so and that was completely missing. 95% of funds that we've raised so far is out of foreign, and despite the fact that there were also multilaterals and DFIs who were putting in money, But they always had this question, why is, forget about HNIs, we can understand that mindset, impact investing, but why institutions in India are not doing it? They can't say that anymore. Right? So at least even Lok 3, our target is at least 20% has to be domestic, and this will be all institutional.
One more thing, but the Mudra scheme also holds huge promise. So that's another government initiative, including this SIDBI and NABARD investing. So encouragement to venture from government, very important.
Very focused on MSME.
Very focused on MSME, and you believe that that it is actually working on the ground. But Rajiv, Vishal, appreciate you joining us here on CNBC TV 18. We wish you the very best of luck, and we hope that this debate on entrepreneurship and the purpose of business at least gets reflected in the bets that you make, and we hope that it is going to be scalable and replicable, and we will see a lot more of these bets paying off. Appreciate you joining us on CNBC TV 18. With that, it is time for us to wrap up this Young Turks special from all of us here. Goodbye. Many thanks for watching.
Celebrating 15 years of Young Turks.